So there's a look at U.S. futures. Pretty flat open is in store at this stage. What is needed to push stocks to fresh record highs? Let's get more from Philip Petursson, Chief Investment Strategist at IG Wealth Management. Great to see you, Philip, as ever.
Great to be here.
Thanks for joining us. What's your feeling about the market right now? Is it toppy?
Right. So, no, we don't think it's toppy at all. We think that the gains that we've seen out of whether it's the TSX, the S&P 500, the MSCI EFI, they're all justified. We're seeing it all being propelled by stronger earnings growth. And this is a different narrative than perhaps what we were coming into at the beginning of the year, where people thought tariffs were going to drive earnings lower. But in fact, we've seen the opposite. And the earnings results have been nothing short of very, very encouraging. And the messaging going forward continues to be the same. So we see this environment as a new economic cycle and a new market cycle.
A new market cycle which could push stocks significantly higher?
Exactly. If we think post-COVID, we had what we would call a very, very truncated economic cycle where you had the recession immediately after COVID by the rapid response or rapid recovery. And then you had the, we would call a rolling recession in 2022 and 2023. Since then, we've seen a recovery or emergence of recoveries in the housing sector in the United States, in manufacturing in the United States, in trade globally. And this, we think, is going to propel a new economic cycle and is driving this bull market.
That's interesting. I mean, within the United States, it looks like there is going to be significant new manufacturing capacity going in, big new factories.
There's that, but we're seeing the let's call it the hangover of the tariffs start to dissipate. So we've seen new orders start to pick up on the PMI. We're getting that PMI number later today as well, the early reading on it, and we think it's going to be above 50, which means manufacturing is starting to expand again in the United States, which is a leading indicator towards earnings growth for the back half of the year.
You think that retail turning to gold, you think retail investors are only now beginning to get serious about it?
Yes, and the gold has had a quiet melt up, and now it's speaking more volumes as it's breaking above 3,700, 3,800, and perhaps on its way to 4,000. We look at the participation by the retail investor at looking at the new issuance of GLD. So the GLD is the ETF in the U.S. that allows investors to buy gold. We've only just seen in the last, call it, year or so, incremental increases in the issuance of ETF shares. So that tells me that the retail investor was late to the game. They're starting to pay attention and they're starting to get in there. That coupled with central banks that continue to buy, we think that's bullish for gold going higher.
I saw some sardonic commentary yesterday about the Russell 2000, which is near its own record highs, the small cap benchmark in the States, that a lot of those companies are unprofitable, and that this implies that investors are willing to grab assets even if they're low quality.
Well, that could be the case, but the question is, are they unprofitable today, turning into profitable companies into 2026? And given the market is a leading indicator, I think that could be the case. We have seen a lot of pent-up demand, perhaps, in the United States. Small caps were left behind on this rally, but perhaps are starting to catch up. When we look at the technicals are encouraging. We had a double top. Finally, it's broken through that resistance, and it looks like it could be headed higher.
So is this a narrow market? Focusing on the U.S., is it a narrow market led higher by just a few stocks?
Right. In our view, the answer is no. When we look at it, the average advancers through this year has been 275 on a weekly basis. So 275 stocks out of the S&P 500 have advanced on a weekly basis. Well, if you go back in the past, it's about 260. So we're right in line with the long-term average. That's suggesting that it's not just the Magnificent Seven that's participating. In fact, if you look at the year-to-date performance, you got to go down to the 40th best performing stock before you hit one of the Mag 7. So that means there are 39 other stocks that have done better than any of the Mag 7 so far this year. So this is saying that the participation is starting to broaden out.
Give us that again. Sorry, you're talking about the S&P 500.
S&P 500, yes.
39 stocks have been better this year?
Have been better than the best performing Mag 7.
Oh, that's an interesting stat. Because if you'd asked me without looking, I would have said, oh, it's NVIDIA or Oracle.
No, they're further down the list.
I like this line. You have the burden of proof is now on the bears, not the bulls.
Yes, exactly. And we spent some time with some of our partners and doing a lot of research out there on what the street is saying. And there has been a lot of bearish sentiment. And if you look at the sentiment surveys of investors, it seems to lean more bearish. And yet there's no good reason for that. Look at the U.S. City Economic Surprise Index. It has been ticking up, not down. If you look at some of the other, labor data has been a little bit weak, but that alone isn't reason to be bearish. When you look at all the other drivers of profitability, it leads more to the bullish side. So even though there's this bearish sentiment, we put it upon them to say, okay, prove it, because we're not seeing any evidence of this.
It's interesting, though, against this troubled world backdrop. I mean, countries spending massively more on defense, wasting money on weapons instead of building productive stuff. And America's leadership in the world, if I can use that expression, questioned with this America First policy in the White House. That stock market investors seem so optimistic.
Well, think of it this way. Never underestimate the ability of a company to continue to drive earnings growth. If, when faced with adversity, good companies can overcome it and they can make profits in multiple different economic environments.
Philip, thanks very much indeed.
Thank you.
Philip Petursson, Chief Investment Strategist at IG Wealth Management.